Hey there, and welcome to the Trading Secrets YouTube channel. My name's Dries Cronje, and today we'll be looking at charts again. And specifically, I'm going to talk to you about horizontal levels on a chart. And this is not going to be like any type of level training. I'm not necessarily showing you when to expect resistance and when to expect support and so forth. I'm looking at levels purely from a trend trading market following point of view here. So I've mentioned in previous videos that I follow a trend level price market approach. That's the main approach that I use. Obviously, it gets a little bit more complex once we develop trading systems with that. But for our main approach to finding and trading nice moves on the market, we look at trend, level, and price to determine the direction of the trend and to determine when a trend has changed. So what we have here is the MNQ, or the Nasdaq E-mini or micro E-mini Nasdaq 100 stock index future, and this is the 4-hour chart. So many years ago, I read a trading book. I can't even remember what the name was. I think it's Mastering the Trade, and I can't recall offhand now who the author is, but there's a quite interesting little chapter or section in that book called Hope Lope. And you spell that HOLP or LOHP. And it stands for high of low period or low of high period. So let's say you are watching this market move go up, and you come here to the top candle over there, and that would then be your high period or your high candle. And the bottom of this candle needs to break for the high of the low, the low of the high candle to have broken, in a sense. And as we've said previously, a market level breaks if you have a close below or above that level. Now, in this case, we're looking for a close below a certain level. So this red candle over here, obviously a red body means the close. Maybe let me zoom in a little bit. I just thought maybe this is quite. I didn't want to do that. Let me just see. So that's very, very zoomed in. It's not exactly what we want to do. Let's just do this. Okay, so that's better. So a red body means the close is at the bottom of the body. The wicks obviously indicating the high and the low. So this candle over here would break the low of the high candle. I'm hoping that makes sense. So one of the levels used is for the trend level price approach is the high of the low candle for a downtrend. In this specific move, that would be your low point, and that would be the high of the low candle. So the first candle that breaks that level would be this green one over here. Again, now the close is at the top of the body and above this level here. So that's one way of looking at it. Another way is to say this might be a little bit time frame dependent. It's nice if you're trading on a 1-hour chart, which is nice and fast, or maybe the 5-minute or 15-minute chart. But if you're trying to catch a really long move on the market, thinking to how would I say, using the high of the low candle or the low of the high candle, and that's the same thing as the high of the low period or the low of the high period. I just prefer using candle. Would sort of restrict you to the specific time frame you're on. In other words, it would be a different level for a 4-hour chart than a 1-hour chart, and a different level for a daily chart. So over time, we sort of then reverted to say, let's rather look at the low of the previous swing or the high in a downtrend, the high of the previous swing. So let's take this example. So let's say the market is moving up. It has this little pullback and then it moves up further, and you're now around here. and you're thinking, when will this be a good place to go short? And then you can watch that level, which is the low of the previous swing, to see when that breaks over here, then that would sort of signal a short move. But as you can see, the market went back up and went on and on and on, made a new high over there. So then everything changes again. When's the low of the previous swing then? Then you move your line to the low of this candle over here, which would then represent the low of the previous swing, and on you go. Again it breaks, again the market goes higher. That is another nice example of why it's important to use the third, what can I call this? The third condition of our trend identification system, the trend level price trend identification system, to say that once this has broken that level, you got to see the price move below this. Same thing here. Once it's broken this low of previous swing, you got to see the price move down further before you finally say, okay, now we're short on the market. And I know this all seems terribly, what can I call it? Terribly long term. But remember, as I said at the beginning of the previous instructional video, this is sort of the core trend approach that I use. Obviously, there's way faster and better ways of trading than this. But core trend principles help align you over the longer term with the market. Obviously, you're going to want to get in and get out on a more shorter time frame. And for that, what we do is what I call intra-week trading. We get in on a Monday morning, well, US time morning at least. In South Africa, where I stay, it's often late afternoon or early evening when we get in. And then we stay until the Friday afternoon, US time again. Again, where I stay, it's often quite late on a Friday evening. But yeah, that was just the level section, or a level short instructional video on the trend level price market approach. Soon I will show you the price part. Chat to you soon. Thanks for watching. Bye bye.